All right, everyone. I said it last week. I'll say it again this week. I get the most fun time to come on and do this because it seems like every weekend for the last year, some craziness has happened out there in the market. And we get to see a little bit of the aftermath. I like that this is around noon because we get all that day trader craziness out of the way, and then we get to look at a little post mortem and see what happened. For those under a rock, we had a massive rip in crypto. So we'll talk a little bit about that. Go through equities, go through some Forex stuff. I think there's a lot to talk about in the market as a whole. And then, most importantly, we'll start going through your guys' chart requests. Anything you guys want me to talk about, I've got the chat right here, dead centered. So ask me about tickers, ask me about general ideas when it comes to technical analysis or topics. Let's have a little conversation when I'm done my overall rant. So, as always, for new people here, welcome. My name is Michael Nauss. I'm a chartered market technician, CEO of StatsedgeTrading.com. And without further ado, let's see what's going on here. Let's do a little screen share and bring up what everyone came here for, which is charts. Remove some of these lines. So I think we got to start with Bitcoin, right? There's nothing we can't talk about anything that happened in the market today without talking about this Bitcoin. I think not only was this a monster move, I think this could be a monster move for Bitcoin as a whole, right? People, you call it whatever you want. I heard the kids are calling them liquidity grabs nowadays, but back in my day, they were just bear and bull traps. And the idea is we between a bear and a bull trap, as someone again very much demystifying technical analysis. I'm a quantitative trader, so most things I enter and exit are based off of statistics, algorithms, things like that, things I can prove, things I can touch. And one of them actually uses the bear and the bull trap. And the idea is simply if you have a clean area, an area that everybody out there is watching, if you've got to really squint to figure out what it is, then it's not a clean area. So you find a clean area that everybody, whether you're a technician or a retail person or an institution, you're watching that zone, you get a break of that zone. That does a couple things, right? Always going into the psychology of moves. So when we broke down here in Bitcoin, did a couple things. People who are looking to short Bitcoin were probably waiting for 90,000 to break. If we can break 90,000, I can start to get short. And they did, right? We can see some of this in some of the commitment of trader data and things like this that I can show you guys later if you're interested. But we're having Bitcoin starting to move lower. That's getting some shorts involved. Also, it's getting some longs out. I know a ton of people out there would have bought Bitcoin as it broke out here. I did. I bought this breakout as well. I got out around $100,000 because I didn't know. I assumed that'd be a choppy zone. And then we consolidated sideways for a period of time. If I was still in this, I would have done the same. Put a stop under 90,000, especially after this wick right here. Say, if we break 90,000, I'm going to get out. It's time to go and do something else. So that broke pretty quickly, and that causes this flush. This is how breakouts and breakdowns are caused by people putting stop losses out, by shorts waiting for some break of something in order to take a trade. That's what everyone's looking for. We have that move down, we have that move lower, and then we consolidate a little bit. We had a flush down. I think there was a massive liquidation event that occurred right here. And then in the weekend, that whole tweet came out with the Bitcoin strategic reserve, as well as a bunch of other currencies, and that ripped us back up. And right now we are holding a little bit above this 90,000. So the reason I think this 90,000 is important is let's take that speech that I just gave and now put yourself in both of those people's shoes. Say you didn't do anything with Bitcoin. Let's say you're not even interested in Bitcoin. This is still important because I think Bitcoin's a big risk asset and shows us potentially what could happen in the overall market. So, step one, I think what's happening is the step one is essentially all of those shorts, they're now underwater, right? So we ripped back through that level. If you were short at 90,000, you're now underwater because it went to 92, 93, 94. It's pulling back now, but you went from being very nicely green to red. That's going to make you reconsider your thinking. That's going to make you reconsider, okay, I did have a bunch of money and now that money's gone. So do I get out of my position? Because if I do, that means buying. Also, say you're someone who got stopped out. You got stopped out at 85,000, let's say. And then you pick up your phone today, you're at work, you're bored, and it's at 90,000 or it's at 95,000 was earlier. You're getting kind of mad and you're saying, maybe I should get back in. So if we break down and then we turn around and we get back in, that's also buyers. So putting yourself in that mind frame of, hey, I'm someone out there who is short. Well, maybe I'm going to cover. I was someone that got stopped out. Maybe I'm going to buy. Put both those things together makes it for a very important level. So if we stick the landing here, and I think the next couple of days is important, again, as someone who's a technician, I don't really care about the actual news of a strategic reserve. Don't even really know what that would entail. I have no idea the point behind that. I'm just looking at the technicals. And the technicals say if we're holding this 90,000, there's a lot of shorts that might be underwater. There's a lot of longs that might be having FOMO, right? It's the fear and greed. That's what moves the market. So we need to understand both of those mechanics. If we can stick the landing, I think at the very least we move to the top end of the range, and from there, again, the trade I'm looking at on Bitcoin becomes very simple. Is if I can get in somewhere around here, which if I see us hold for a day, I will, and I'm putting my stop at this low, right? If we break this low, all bets are off, right? It's just that was a sell off, a bounce, and we're going to continue lower. If we hold this low, well, we could see potentially the high of this range. The high of this range is 108. That's already a 1.5 risk reward, which just means if I'm risking $100 to potentially make 150 or 1,000 to make 1,500 or whatever it is that you're looking to do, that's a pretty good trade. If I'm right half of the time, I'll do well doing that. So the question is, do I think I got a 50-50 win rate on this? If so, and we end up breaking, I think it's very easy to get, 2 to 3 times your risk, which is 110, 115. So that's what I'm seeing there on Bitcoin. And the reason I led with talking about this is because I think that's what's going on with the entire market. Right? Bitcoin, I'm sorry, Bitcoin maxis, just put your fingers in your ears for a second. Bitcoin is not this thing that is, dramatically different to the overall market. It moves in lockstep with other risk assets. It moves in lockstep with the Qs and all of this. So it's going to move with tech stocks. It's going to move with risk on type assets. So if we're getting this move, then that means we have potentially moved back into a risk on scenario. If Bitcoin's going to hold here, then it means this potential bounce that we had on the S&P 500 at these lows is going to continue. And if that bounce is going to continue, the natural place is to the top end of the range. Today's action was very interesting. The fact that we came down to fill this gap and this end of day rally that we had on the SPY, and both times now, twice, maybe a double bottom here, we were met with buyers. So buyers keep coming in at places that you would expect buyers to come in. Now, from a wide level, nothing's going to get interesting until this range resolves. And we are smack dab in the middle of the range. We are right at that 50% point. So we need to see the range resolve to the upside if we're going to get super bulled up on things. Otherwise, I think we're in a buy the dip, sell the rip type market. That's why with Bitcoin pulling in a little bit, I'm interested in buying this dip. And then a push from there, I will be a seller right away. I'm not looking to hold anything until the market can show me that we're going to break out of this range. This is year 3 of a bull market. We had 2 back-to-back 20% years. It will not surprise me at all if we consolidate for this particular year as well. All right, a quick look at the heat map, kind of showing what's up and down today. It's everything that we expect, right? It's everything we expect when it comes to, other than NVIDIA. I guess that's the shocking thing, but big tech's up. A lot of risk on stuff is up. We still have financials and we still have healthcare doing phenomenally, which they have been. Tesla, just a rocket ship. I don't know what's going on here, whether that's a crypto play. I know we had Bitcoin before, but just a lot of these things are moves that make sense when you're seeing what you're seeing in crypto and you're seeing this kind of the tech bro come back out. And you'll see this happen a lot where Palantir has nothing to do with Bitcoin. but Palantir is up a lot today, probably because Bitcoin is up, right? I could see some news here, and they'll probably have some news after the fact. But the fact that Bitcoin is moving and Palantir is right at this level, that to me is more of a reason that Palantir is moving up than anything else, right? So that's kind of what I'm seeing in the overall market, right? ITA, I've heard someone mention defense names. This is my favorite defense sector. This is U.S. defense, but I think they're all going to move pretty much the same. We're hitting near highs, and this is what I want to do is I want to look at different sectors out there, and I want to say which sectors are hitting highs first, because then if the market hits highs and breaks highs, then I think those are the sectors that I want to put my money personally. Right now, XLF is the main standout here. It's looking phenomenal, breaking through this level. Boring, but a lot of this stuff, KIE is insurance. Insurance names have already broken out of this range, and now 3 monster days in a row in insurance names. And then healthcare is looking interesting as well. Healthcare with a nice breakout of this really tight base it's been in for a long time. So we're seeing healthcare, we're seeing financials, we're seeing a lot of these names starting to break out and starting to push higher. So if the market's going to break out, those are the names I'm going to be in. I'm going to go through your guys' names, but I see a lot of technology in there, and I get it. People have been trained for the last like 2-3 years that you buy technology names and you make money doing them. That might be changing, and it's just based off what I've seen in the charts. Healthcare and financials, there's no tech in there, and you don't need technology potentially to rally the market. It's just a big weighting in the market right now. So I get why everyone's very interested in the whole technology space, but because it's the most fun. Let's just say that way. It moves the most. The really cool stories, the really cool names. The boring stuff seems to be doing the best, right? If we take a look, the Dow is actually holding up really well here. It didn't participate at all in the sell-off. Now you can, I guess, I'm probably a boomer talking about the Dow. All the kids only look at the Qs, but this is just showing you the boring stuff and the boring stuff continuing to work, right? This right here, this chart that I like to look at every now and then, this is Berkshire Hathaway versus ARKK. So this is Uncle Warren versus Aunt Kathy. And just to show you the type of names that are moving right now. Warren Buffett is very much beating on Kathy Wood, just showing that the names that Warren Buffett would buy are doing much better than the names that Kathy Wood would buy. So huge move and huge strength in these particular names. Again, you don't need me to tell you the stuff that Warren Buffett buys, right? Boring, simple and boring, right? And that seems to be what's working right now. So GCT, let's take a look at some of these tickers. We'll see through here some of these names. Giga Cloud. So this was a high flyer, I remember, way back in the day. Yeah, hit a low of $4, spiked up through. One of the first things I like to do in a company that's a fairly new issue is put a VWAP from the IPO. This will generally show us the price that the average market participant from this IPO is in. They are underwater right now, and this thing is hitting support. So this looks like it has earnings coming up here soon. Estimates in, all that stuff. Just looking at the bottom here, might be hard to see, but green up arrows are beating earnings, red down arrows are missing earnings. Has a history of beating earnings, but not something that I like to personally take a binary event into. My thoughts on news are probably going to be different than a lot of your guys' thoughts on news, where my idea behind news event is it's not the news event itself, it's the market's reaction to it. So I always have to wait till after the news event happens, unless you have, you've counted the amount of widgets these guys have sold. I don't think it necessarily you're going to have any edge out there to say this is a big news event that's happening now. One kind of technical analysis old adage is that news happens in the direction of the trend. Unfortunately, this trend has been lower, so it's just showing us that potentially it means it's selling off. However, you do have a big area of support right here. I think for me personally, if you said, hey, Mike, you have to trade this, I think it becomes you wait for earnings to happen. If we hold this $16 or so, you could take a little shot on it against that low. That's how I would look at it. Last thing I'll say with earnings coming up is I always like to look at the trend into earnings. And if the trend into earnings is often lower, that sets up a couple scenarios. One is if they beat, well, the market's kind of beating them down into this earnings report. So if they end up beating, there's a lot of people there who are selling into it, who are shorting into it. Those people could potentially be wrong. That, in theory, could lift us higher. But again, it's just a big binary event. You can also go, one of the beauties of going back through and being able to see these earnings, you can see what kind of gaps it normally does. Are they insane gaps? In this case, nice little gap up when it beat earnings, and then a little bit of a gap down when it missed earnings. So you can look at this and say, okay, am I going to get clobbered if these guys are wrong? It doesn't seem like earnings matters too much to this particular name. This is an earnings day where it did pretty much absolutely nothing. This is an earnings day right here where it did nothing. You're still taking a big risk, and the reason for it is that stop losses obviously won't be working. You can have wild movements. It becomes harder to trade earnings. But just know that you've got this level. It was like $16. You can lean against that level if that's a trade you want to take on this GCT with earnings happening. N NWBO. You guys always bring me so many names that I haven't heard of before. So let's take a look at some of these. NWBO. A 29-cent biotech stock that is at lows. I wish you luck. So this is one of those things. Oh, and it's OTC. So it's OTC, so it means it got kicked off of or never made the NASDAQ. It means it's not a great company, in which, right, you can, there's no earnings here, right? They don't make a thing. They're one of those, you want them to make a thing. So this is the kind of thing. I'm not one of those technical analysis guys who will tell you that technical analysis is the greatest thing ever. Technical analysis has its place, right? I know this is weird having a CMT next to my name. That I'll kind of warn you against some technical analysis names. The technical analysis has its time and place, and what it does best is a risk management tool and a trend tool. It's telling you where people are getting involved and with what veracity they're getting involved, right? It doesn't tell you anything magical. So when you're looking at something like this that hasn't moved in a couple months, it's getting beaten down, it looks awful. Like, just from a chart point of view, this was a $10 stock, that's a 28-cent stock. So this looks just absolutely awful. But technical analysis isn't going to do anything for you here. This is one of those things in which we need to you need to know what they're reporting and when they're reporting. This is where it makes more sense to go, this is a company that's trying to do X when it comes to what its drug is, and you're taking generally a binary event on its drug. You can play names like Merck and Lilly and mRNA and Pfizer's a little bit more technically because it's actively traded. So there's people making bets, and technical analysis doesn't work if people aren't making bets, because it's one of those names in which if no one cares, you don't have that supply and demand, which technical analysis and technical analysts use to try to figure out what's going to be the next type of move, right? We need to kind of curtail what we're looking at with technical analysis. Now, if I had to do a look from technical point of view, right? It's got a floor right now at 24 cents. You could lean against that, but this is really one of those things in which it's only going to matter when it comes to what's going to happen next with whatever drug they're trying to do. All right. Let's take a look here. SMCI. No more problems with the DOJ? No? Okay. Um, SMCI finally reported, very much a sell the news event, right? Everybody in the world was waiting for SMCI to actually report earnings, to do something, finally tell us that you're a legit company and that the DOJ isn't going to smack you down. And it felt like a sell the news type of event. And what happens is if people get really hyped up into an event and price especially moves higher into an event, that to me increases the likelihood that we are in a sell the news event with SMCI. So I don't think there's any risk taken off the table now that it's reported and it's probably in more compliance with exchanges and DOJ and the S&P 500 and all of these things. It may have, and if it did, it's going to move with the big guy, which is NVIDIA. And when I was doing my monthly charts, which once a month, right, we sit down and go through our monthly charts to get a good broad understanding of what's happening in the market. This is the monthly chart of the semiconductor index. This is an ugly mess. These are bit of candlestick analysis for those people that are kind of new at it. Is you have, when you have a topping tail, essentially just means buyers came in, sellers pushed it down. You have a bottoming tail, sellers came in, buyers pushed it up. You have so many both topping tails and bottoming tails in through here. This is the quintessential chart that just shows indecision. No one knows whether semiconductors are overvalued or undervalued right now. So they're just chopping sideways. So SMCI is going to move a lot with this overall chart. And just like NVIDIA, let's go back to a daily, that is moving down. SMCI is moving down as well. So I would watch these lows right here on NVIDIA. And if these lows right here hold and start to push higher, then SMCI, you can see, kind of has the same rainbow type look, big push up, big push down. And that would kind of represent these lows right here on SMCI. If they hold, then you got a pretty decent trade here. If not, you got to go. And for me, anytime I know of a stock that the DOJ had to get involved, I'm not interested. Right? It's not something I'm super interested in trading. And then TSM I see as another one. TSM is the same type of idea. TSM, there's a lot of risk already priced into it when it comes to things like China and Taiwan and all that stuff sorted out. But the whole semiconductor sector, like I just showed you, is a bit of a nightmare right now. And I think it's one of those that it had such a push up that you have two sets of players right now fighting in the semiconductor space. You have people who've made a lot of money and they want to take some of those profits, apply those profits elsewhere. That's why I'm always looking for rotation, is where is this money going next? Great. Then you also have people who are buying all the dips because they're worried that they are underexposed to what potential AI play is. And those two sides can fight it out for an incredibly long time. And then we're waiting for the next catalyst to occur to say this is where semiconductors can potentially move higher. I, for one, think they might be tapped for a while because we have a pretty good understanding of what we need to build and to run AI. I think we do need that kind of shock event from somewhere to move up or down, especially now that NVIDIA earnings is out of the way and they didn't say anything that really shook up the market at all. Range bound names can continue to stay range bound for an incredible period of time. And the problem with range bound names is they frustrate the most amount of people, right? The bull trends are fine, bear trends are fine as long as you're not holding your stock all the way down. It's the chop in the middle that really messes people up. So I know I'm being discouraging about these semiconductor names, but it's just because I don't want people to get chopped up like that. If the market has some idea of what's going to happen next and there's a move higher, then these things will break out and you don't necessarily need to hold them here or buy the dip on them. If there's going to be another massive lag in semiconductors when it comes to AI and everything, I don't think you need to be the guy trying to pick the bottom. I think you can just buy it as they go. These are very much momentum names. So instead of buying the dip, you can kind of buy them as they start to push up. I think that's a pretty decent way to play these. And same with TSM, right? You're at a level, it's a very important level here. And the reason for it, again, just to demystify technical analysis a bit, this is the last time that buyers came in and took control. We had a pullback here into kind of 170, 180, and then buyers took control. And then we came back here and then buyers potentially need to take control again. If they don't, then we have to look at lower prices. But again, the way I look at it is there's no semiconductor out there that is bullish or bearish. They're just kind of range bound. They're just stuck in the middle, hoping for and pushing for some type of direction. A good example we could use what's happening. I've just because I'm seeing it out of the corner of my eyes here is just a chart of the Qs today. And this is the same thing. If someone said, "Well, what do you think is going to happen later today on the Qs?" I don't know because we're range bound, right? There's no action here, right? If we break out here on the Qs, we might take a shot on the high of the day. For you day trading degens, if we break 506, maybe we're going to take a shot at the low of the day. But when it's in the middle of the range, you're very much best bet is to try to stay out. You know, you can use things like the StockTwits platform to keep an eye on it. It's one thing I use StockTwits for is the watch list feature. I can, you know, if it starts moving, I'll see the price there while I'm out and about, and I will notice on in the feed people will be talking about whatever news events getting it moving, that type of thing. But until then, with a lot of these, I think they're kind of stuck. GRRR. There's never been a time where this one's not mentioned. And I talked about it a couple times in this zone. I remember it being mentioned that I really like the look of the chart. I didn't end up pulling the trigger on it. I just kind of missed it. But this is a great look. Right? We can take a look quickly at the news, but great. It has some sort of deal going on. But this is a momentum name. Right? Any stock that goes from $3 to 35 is a momentum type name. It is just it's one of those while a momentum name is going, you got to just stick with it until that changes. So when we broke out of these prior highs, this is what I was talking about with the whole semiconductor space. When we broke out of the highs with the semiconductor space, then you have your time to get in. If we don't break out, then you want to just stay out. Same with this GRR. People were asking all through the pullback and all through the consolidation. You can get cute and try to time a breakout a little bit early, but you could just bought the breakout, right? And it's one of the hardest things in trading. It's just waiting for things to happen. But in this case, so far, you could have waited for that thing to occur in which you're looking to buy the breakout. So looks great, but you got to remember it's momentum name. It's like RGTI, like these quantum computer names. I don't even know what GRRR does, to be honest. That's how much I think about these things. But the charts look similar. You have these massive momentum pushes on new news on a low float stock, something that's been beaten up forever, and people have probably been holding forever and probably really rooting for it, and memes being posted, and everything's great. But with most momentum names, they are great things to trade as long as you don't get very psychologically married to the stock and as long as you have an exit plan. There's people out there who had these quantum computer names from $1 all the way up to $20, and now it looks like it might be working its way back to $1, and they'll hold it the whole time. And that to me makes absolutely no sense. So, like any momentum name, this thing has already exploded. So just make sure you have a game plan here. For me, it would be something like if we fail, worst case, this $20 low, it's time to go. That's a massive percentage loss from here. So you might want to be a little bit tighter, but use a trend line or a moving average or whatever it is. Know that whatever you use will not be perfect. There's nothing perfect out there in trading. You're just looking for a best guess of potentially what could happen. So, right, a simple trend line would just be you connect this low right here, and then you connect that low right there, and there's your trend line. And you can set an alert or just check it once a day on this trend line and say, yell at me when this trend line breaks. That way it does a couple things, because with momentum plays, you'll want to stay with them as long as you can, because the all-time high of this thing was what, 150 bucks. So yeah, I don't know if you count that. So this looks like maybe this was a D SPAC that had to do a reverse split to stay listed. So, right, the high of this was now at 100 bucks. So could it get there? Maybe. Who knows? That would be a 3x from here, but you want to do two things with your trailing exit on momentum names. One is you want to have a plan to stick with it as long as you possibly can for that whole regret minimization of what if the thing just rips forever. But B, you don't want to be the guy left holding the bag. So again, trend lines not perfect. None of these things are perfect. It's just you pick something and you accept the fact that it will be imperfect, that you will be you won't get out at the top, right? You're either going to give a lot of profits back if it hit this trend line right now. That's $20, so it's a big down move from here. On a percentage basis, that's like a 40% down move. So when you're trailing a stop, you're either going to you're definitely going to give up a lot of profits from the top. The other thing to do is just to pick an arbitrary point which should take profit based off prior support and resistance. Problem with that is sometimes you're going to get that profit target and the thing's going to continue to rip. So it becomes like a mental exercise of which of those things are going to hurt you less. I think the actual investment advisors just call it regret minimization. You just walk around, you say, okay, will I be mad if I get out and the thing doubles, or will I be more mad if I don't get out and the thing gets cut in half? I think that's a good mental exercise for these crazy high flyers to kind of think about and to look at. This TRNR, I already know this one. One of my algorithms shorted this today. I think I'm out. So it's just full disclosure. I made money from the short side of this. This chart is hilarious to me because the high of this chart is $34,000 a share. It's at $2. Obviously, again, it didn't happen. That means if I kind of give this speech every time because you guys trade a lot of this junky stuff, but to stay listed on the NASDAQ, you have to have a stock price over $1. So what happens is this thing sucks. So it went under $1, had a reverse split, continued to do bad, under $1, reverse split, continued to do bad. This to me, again, I hate to be the guy. I feel like I come in and I crush people's dreams all the time. This smells like a pump and dump to me. I bet you if you Google this stock and like some of the biggest named YouTube guys out there, the guys who say I turned $1 into $1 million in 3 afternoons. I bet you they're trading a lot of this, right? This feels very pump and dumpy. So if you're going to trade it, I think this is like a lotto ticket trade. You put in enough, knowing that if you're wrong and the thing goes to zero, you're a little bit mad, but you'll be okay. I don't think this is something that you take a lot of risk in because it was a $34,000 stock that's $2, right? It did that for a reason. Also means that there's probably a lot of dilution, a lot of selling of shares as things went. So if you're going to get diluted a lot, then you're probably going to continue to get diluted. Company's probably not doing good financially if it's gone from $30,000 to $2. So again, a couple things to keep an eye on just to rain on your parade a little bit, but trying to give people kind of fair warning. Again, the thing could go to $30, certainly could. Anything can happen in the market, but it just does not have the history of holding on to any breaks for any period of time. ASTS. So I love this chart, right? I talked about it all the time how I miss this breakdown of support and the rip. I think this chart is great. It's all the same caveats as GRRR, in which it's a momentum name. Eventually, when people leave a momentum name, they gotta run away. Same caveats is I will not buy anything into earnings. It's taking a complete gamble on something that I have absolutely no control over. I can't manage my risk because ASTS could be $40 tomorrow, it could be $10 tomorrow. I don't think any of those results would scare or surprise anybody. So all those caveats in place, but this is a very nice looking chart. And the main reason for it is just this. And this is what I talked about on Bitcoin at the top of the hour, in which you had a big area of support. A lot of people were buying in through there. You broke support. That probably triggered a whole lot of stops, probably got a lot of people in short, and then it ripped. So the people who got out are FOMOing. The people who shorted are wrong. And that combination of things can lead to incredibly explosive moves. Ever since then, it's just been consolidating. That's what I look at, what's going on here. It's just a sideways action, taking a breath, trying to figure out what's going to happen next. Probably because earnings are coming, right? People don't want to take a big bet into speculative names before earnings. Me neither. So I love the chart. Technically, this looks amazing. I know it's in a sector that everybody is super interested in. It's a big story sector right now, but I'm not going to take a big bet into a binary event like this. For me, it's one of those things you look at tomorrow's action. I would set a price alert at 32 or 33. If you can get through that 33 area, you're looking for a quick move up to 40. If you fail and you get into the 20s, maybe you take another buy at the support level. If it shows, you're probably, if it's one of those things that if you're bullish and you stay out, you're probably going to miss it. If you're bullish and you buy in before earnings, it's probably going to tank. It's just, again, it's the nature of things. So for me, it's more of let's wait and see what the price action is. But I love this chart, and I actually have a lot of regret that I didn't get this undercut and rally. And because I remember I was on here, either now when I'm on here with you guys or Friday mornings when I was on with Jordan and we were talking about this. So every time I see this come up again, I get a little bit sad because it was like 20 bucks that I wanted to get involved, and then it ripped to 30. So it's like a 50% gain. For me, I would have taken a massive chunk of the position off, and I probably would just hold a little bit just to see. Tesla, super interesting. Bounce today. This low right here that I marked is the April 2024 low. And it's one of those things where that was the low of this move right here. There's a 2023 low, but that was a massive low. And this is an anchored view up from that price. Also, these highs, and I think more importantly, these highs around 260 or so. I was watching this support. Let me remove some of these drawings, clean this up for you guys. I was watching this area up here, this kind of 350 area for a long time, looking to buy some against that zone. That didn't work. It flushed down through, so you move on there. Then it got back to this prior breakout, and so far it's holding it perfectly. Just absolute textbook hold. Now, what we need to see is more time at that level, either a retest for potential buyers to come in, or at least just more time at that level. Because right now it's hit the level and it's bounced a little bit. The intermediate term trend is still in a downtrend. Again, I want to buy, I want to own some Tesla, just because I like the overall chart. But until we get more action, like I would love to see it break 300 and then hold 300 for a number of days, just because it's, again, massive level that it broke out of. And this is one of those things where, like anything, it's not magic, but when you get a retest of a big breakout point and that retest is successful, sometimes it can lead to a massive move. And again, trying to go always back to the psychology of the bulls and the bears, that's what we're trying to do with technical analysis. There's a lot of people who bought that breakout who may be defending that price, so buying more now that it's back there. There may be people who have missed that breakout who were like, oh, I really wanted to buy it at the 290 or the 300, and I missed it, and it ran all the way to 480. Well, now it's back to 300. Maybe they'll get back in. Then also the short people who shorted that level got completely face blown off, and now it's back to their level and they're back to even. So there's just a lot of emotion around support and resistance zone. A lot of buyers and sellers that are going to take action based off of their P&Ls, and that's what creates these support and resistance zones. So if we can hold this 300-ish area, so anywhere from 300 to 275 for a week or so, and then look like we're starting to break out and move higher, then I'm going to get involved in Tesla. Until then, it's in a downtrend. It's a broken stock on the shorter term, intermediate term basis. So I just kind of want to stay away. Now, I noticed that you also talked about TSLL, which are these leveraged ETFs. Just a couple notes on these that I feel like I should do like PSAs periodically. One is always do your analysis on TSLA, because you can see the chart here looks much different. If we look at these support zones, we're well below it. And you can also see that the hit was much bigger on this one. These are meant for very short-term trading, like a couple days to maybe a week or two, and that's it. And the reason for that, I think it's LABU, is it? That I like to use as an example. Yeah, these things on purpose go down over time. So LABU, is a 3 times, and the 3 times will obviously be worse than the 2 times, but this is a $3,000 stock that's a $70 stock. What happens is, again, perfectly by design, is all of these leveraged ETFs, single stock, multi stock, doesn't matter. They will go down over time because how they get this leverage is they use derivatives for these leverage, and these derivatives will degrade over time. So they have to always make up for that by the price moving down. So if you're going to trade a TSLL in order to get leverage on a TSLA, you have to do so in a much faster way. I apologize, my dogs are going a little crazy here. Hopefully they're not going to be too bad. I apologize for anyone who has dogs and is hearing this, but yeah, so you get this natural degradation of these securities that happens over time, and there's nothing you can do about it. It's built in. It's not a bug. It's a feature. So just be careful. It's a big way to say that. Not just to the person saying TSLL, but anyone who's looking to trade these leverage ETFs. I think they're great. I think they're great if you're a day trader. I think they're great if you're a short-term swing trader. They're very problematic if you're someone who said, "Well, I really like Tesla, so I want double the returns of Tesla." It won't be double the returns of Tesla. It will be less, and then if you're wrong, you'll be wrong faster. So again, if you read the actual prospectus behind this, they say that double the daily returns of the index. So every day it will look like it's double, but then it'll also be double to the downside. Again, just a lot of weird math there. Short-term trades, take your scalps with them, kind of move on from there. Uber. Uber and Lyft were asked back to back. LYFT. Does anyone? Oh, yeah. So you want to talk about relative strength, right? This is a great lesson on relative strength versus relative weakness. There is so much published articles and studies. And again, as a quant, as someone who does something always from a quantitative point of view, I love these. I love these, the fact that people go in and they do the math and they study things, and we can read those and build trading strategies around there. Relative strength is the most studied part of finance, kind of period. It just shows that if you're buying the strongest thing in a sector, or if you're buying the strongest sector in the market, overall, over the long run, you do better than people who are doing the opposite, right? The so you're doing that from sector to sector in the overall market, but you're also doing it from stock to stock. So Lyft and Uber, we can all agree, are in the exact same business, in the exact same industry, looking at the exact same thing. So when I look at Lyft, this one hasn't even got going. I think it's at its near its all-time lows here. And then Uber, although I don't think the best stock in the world, come on, Michael, need another coffee, it's hanging out near highs. So there's an obvious leader here. Now, me personally, just going by all of those studies, of course, it won't work all of the time. But by going out by all those studies, I'm going to buy the winner. So if I have to buy an Uber and Lyft, the only reason I'm comparing them is I just see them next to each other in chat there. Again, you've got another 15 minutes, so make sure you ask questions in chat. Now that I see those occurring, and that they're Uber is stronger than Lyft, then Lyft is just instantly out of the equation for me. Because if Uber is going to rip, Lyft may rip a little bit, but if Lyft does well, then Uber should certainly do well, right? If ride sharing as a whole is going to be a positive thing, it seems like investors prefer Uber as opposed to Lyft. And when it comes to Uber, I really like the look of it. You want to talk. So now we have done relative strength across areas, right? If we're interested in a ride sharing company, we are going to take a look at Uber, right? So we've removed that. And now we can do relative strength to the overall market. An easy way to do that is we can just add the SPY to our chart, or we can just eyeball it. And you can see if we zoom in here, right, the SPY has done this crazy range for a period of time and is nowhere near its highs yet. And then Uber is quite much closer to its high. So a little bit of relative strength to the overall market and a lot of relative strength to its major competitor. I like the look of it. Earnings is out of the way, and I like the post earnings move. So earnings was in here somewhere, and then ever since earnings we've ripped, and then we've pulled back a little bit. So I think I like the pullback. If you want to trade a little bit on the pullback, I think that's fine. $80 is our, or 81 or so is that most recent high. So I think that's where you're going to find your level. If it can get above that and it can push through that level, then I think it looks great. If we fail to get to and through $82, then I think it might be time over. And you got to, just remember you're inside this overall range. But I really like the earnings reaction. This is, again, another benefit. I'll talk about when technical analysis is great and when it isn't. One awesome thing about technical analysis, I don't need to know the earnings. I don't care. I'm not going to read a 10K or whatever, but I know there are systems, there's algorithms, and then there's humans that do. So if that first move is explosive off earnings, means that there was a lot of people out there that updated their models and said, oh, well, now based off this new information I have from Uber, it's pretty good stock, it's a pretty good company, something I want to take a look at. So if we can get a pullback into that move, I like the look of that one. Some of the technical analysts out there just call that a power earnings move. So you had earnings, and you had this big push after earnings where everybody's kind of racing over themselves to get in, and now it's pulled back a little bit. So now the people who missed out can start to bid in, things like that. Nice looking move. Ideally, like everything, it kind of holds its gap that it put in today and then starts to push higher. But that's a nice looking chart. I like that one. VST. So VST is a utility, but it's like the AI utility, right? This I think was the top performing stock in the S&P 500 last year, and I think it's the only time in like recent history that there has been a overall or a utility as its top performing stock. But this is going to move very, very closely to NVIDIA because this is like how NVIDIA is the poster child for the picks and shovels of the AI trade. VST is going to be the same when it comes to powering the AI trade. And again, it looks good. It's at a very important area, but I'll go back to that semiconductors chart, and semiconductors are just a complete mess, and they are what everyone is looking for when it comes to the AI trade. They're looking for some type of resolution one way or another when it comes to okay, do we still care about AI? Do we not care about AI anymore? What's our thoughts on AI? NVIDIA and semiconductors is one of those ways that people are going to look for it. However, another way that people are going to look at it is they're just going to look at VST because this is like the powering of AI and it's right near lows here as well. So not a place that I would look to place a trade just because you're range bound and you have a range of 200 to 123. So you've nearly been cut in half in this action. I'm not super excited to get in there. Now I'm talking for longer term trends. If you're just looking to buy a little bounce, you think it's a little bit overdone here, you've got a level to play off of, you want to, take a quick hit, move on. I think you can potentially take a trade there, but I just think the world has moved on from the AI trade just a little bit, and it's more about defense names, ITA, right? We have war on the brain more, and we have inflation picking up back on the brain, and we have all these different things that are just more interesting to the market. And it's one of those, I'm worried that investors are going to focus on fighting the last war, right? The last war this time being AI, and it may come into play again later, absolutely. But it just seems like we're kind of focused on other things, and it's one of those that there's an opportunity cost to not moving with the tides of this is what everyone's talking about today. It's not quantum computing anymore. That was a thing for a second. It's not AI and ChatGPT so much anymore. It's more tariffs and things like this. So I think right a pushback as well, right? Merck. Oof. So yeah, Merck is probably one of the worst looking healthcare companies out there. I think Pfizer and a lot of these are as well. I don't know, but I would bet this is probably because if I were to bet they don't have an Ozempic competitor. I think that's kind of what everyone cares about right now. Is do you have an Ozempic competitor? If so, you know, let's get involved and we can have some fun. If you don't have an Ozempic competitor, let's, kind of move on. That's what I'm thinking looking at these charts. I would again talking about investing in the leader. Eli Lilly's looking great, smashing up near all-time highs. And again, you don't have to be crazy with your is it a leader or is it a lagger? You just zoom out, take a look at Lilly, take a look at Pfizer. These are two different charts, and take a look at Merck. Right, these are different charts. So if you have some belief that Merck is going to come out with something that is going to compete or do better than um, compete or do better than Lilly or any of these other guys that are a little bit far ahead on the drugs, on the fat loss drugs, then maybe take a shot here, right? There is an old saying that all gaps get filled. I have yet to see evidence that saying is true. It seems like something that could be easily tested. Again, I always keep saying I'm going to do a comprehensive test on that. I just got to find the time. If so, the premise behind that is that because there's no price discovery inside of a gap, that quite often price will gravitate back into that gap to find that price discovery, to do the whole thing that I was talking about of where are the shorts nervous, where are people trying to get involved in kind of the name that they've missed, all of these things. And yes, you can get that potentially in this zone right here. So if we can close that gap, that gets interesting. For me, it's more about this $100 area. Like if we go to a weekly chart or even a monthly chart might be better. That to me is more of if you look at this $100 area where all the bottoming tails were here. I think a weekly chart's best here. Yeah, right here. If you can retake this support that broke and broke with like a fervor, and you can get through that, that's interesting to me, right? And then you're risking against the low. That's about a 20% risk on a company like Merck. I don't think is really the end of the world. But yeah, right here, again, if you're one of those gap believer guys, it does have this gap that it can move potentially higher into. However, for me, it's just not one of those things that I really don't. Again, I haven't seen the evidence that this gap fill thing works. Um, maybe I'll get to work on that one. SDRL. Oof. Um, yeah, there's not too much I can say from a technical analysis point on this. There's no support because there's really no price action back there. The thing's just completely falling apart. The only thing I can say about this one is technically it is oversold. I, for one, am not a big overbought, oversold guy, especially on stocks hitting new lows, because things that are oversold can stay oversold for an incredibly long period of time. Just like things that are overbought can stay overbought for an incredibly long period of time. So I'm not one that I'm super jazzed either way to kind of look at and say, oh well, this is oversold, I'm going to buy it, or this is overbought, I'm going to sell it. In fact, if you read a lot of the papers, the other way makes a lot of sense. Selling something that's oversold and buying something that's overbought ends up doing well. But this is something that's just kind of completely falling apart. So there's nothing I can say other than if you want to catch a falling knife, go right ahead. Just understand that we call it catching a falling knife for a reason. Quite often you can get cut pretty hard. Tons. I love, I don't think I'll be able to get to all of these, but I love that people are asking all these because for me, this is kind of the work I do anyway, right? I want to find interesting names, and sometimes I do, and I add them to my watch list down here in the corner, and I have new names to look at. So I appreciate not only being invited, but I appreciate you guys asking some of these names. So we'll get to another couple if we can. VSCO with Victoria's Secret, kind of like Seadrill. Before that, it's fallen apart a little bit. Right? We're selling off here to potentially new lows. Now at least we've had some support right here. But when you have a sell-off like this and a sell-off sharp like this, the reason that this is so bearish for us technicians is, again, looking at the psychology behind this is all these things is everything to me, where I want to take a look at it and I want to say, okay, so if I was buying this thing at 50 or 40 or 35 or 30 or whatever, I'm looking for a bounce to get out. So anytime I see a very swift down move like this, I see bag holders. I see people out there that are really, really jazzed to get any kind of a bounce to get out of the trade. Now, if you're someone and you're just looking to take a shot down here, especially because this is back to the breakout point, and you're looking for a little bounce and you're looking to move on, these are interesting plays because it's not like Seadrill where it's hitting new lows forever. This is a stock that moved higher and now is pulling back. So it could be a place just to take a shot, to take a little trade. I wouldn't bet that it's going to double again and go back to all-time highs. It seems like it's something that's a bit broken for now as a chart. Doesn't mean you can't take a shot here or there. So earnings to Wednesday. So you got to imagine that they're pricing in the worst earnings possible. So if the earnings are anything that's kind of sort of a little bit okay, maybe you get a little bit of a move from here. But that's one of those that, hey, it's down a lot. It's probably for some sort of a reason that I don't know, and I think you gotta take a shot if you're gonna have a shot, right? You just gotta take these little shots, and kind of move on. Let's do a couple more here. My thoughts on oil. We can use USO, or we can do CL. We can use the futures, whichever. Range bound, I think, is the way to put it. Just completely range bound, and not something that I would take a bet on, but we are getting close to support here on the crude. I'm just using CL. I think it's the most liquid futures contract on this kind of name, and just showing, yeah, this is one of those where we're just stuck in a range. And if you want to play that range, I don't think there's anything wrong with at all playing that range. I think you just got to know that you're stuck in a range. So, the thing about range playing is if you're patient enough to buy a support zone, if we get to support and then sell a resistance zone, then great. You're around 69 bucks. You're close to support. So if you're okay with risking to this 65 low end, you could take a little bit of a shot here. Now, someone who's not a macroeconomist or as a Canadian doesn't understand your guys' politics at all. I think the current administration's stance is that they want to drill more oil. And if so, you got to think that might be a little bit bearish for the price of oil. However, it's also a chance that that's already priced in, right? So I think the only significant thing I see on this chart is this low right here, anywhere from 65 to 68, give or take. If you're in that zone, then I think if you're looking to buy a dip, that's a logical place to do it. I used to call it a basement window trade. And the reason for, sorry, my mentor called it a basement window trade is, hey, if you're going to jump out a window, might as well be a basement window. And, the basement window is right there. Let's do one more for today, and that's FTNT. And this is kind of the opposite of a lot of the charts that you guys gave me, which is great. So this is the reason I like charts that are going up is as a quant, a lot of the literature and everything about buying trends, and B, a lot of people look at those and they say, oh, this looks overextended. Well, it probably looked overextended at 30, and then probably looked overextended again at 70, right? And now it's at 109. So names that continue or perform and perform well have a chance to continue to perform and perform well. So I think that this is a nice looking name. It's has earnings out of the way, and the earnings reaction was positive-ish. Nice little gap up, came in to fill the gap, held strong. So that's those quant nerds that I keep talking about doing a really good job of saying, hey, this is positive earnings, so let's buy some here. And now you're consolidating. So I think the trade becomes pretty simple. If this consolidation resolves higher at kind of 115, then you're looking to get involved. You're wrong at 105, so you're risking $10 a share. So the question is, do you think you can make $20 a share? And if you think you can make $20 a share with any kind of a probability, right? anything more than, 40%, then that's a trade you should take. If you think it could go to 130 and it has a track record of obviously moving higher, so if you think it can go to 130, then you're saying, okay, well, I'm risking $10 a share to make $20 a share. And I think there's a 50-50 chance that I'm right on this one. To me, that's almost a bet you have to take. You just take those bets small enough that when inevitably you lose a bunch in a row, you're okay. And over the long run, you end up doing well. You end up making money off that. So, all right, guys, I appreciate everyone for coming by. Since we've been talking, I'm just looking at the cues. Nothing has happened. We're just kind of still chopping in a range. So we are in a range on the daily intraday chart. We are in a range on the long-term daily chart. So everyone, I think, should probably calm down a little bit, right? There's a lot of wild action that's happening in this range, but we are range bound. So make sure you are taking small and calculated bets, and more importantly, that you have a plan to take profits when those bets end up resolving for you or against you, because when we're range bound, you got to stick and move. Again, thank you guys for coming by. I'll see a lot of you guys on Friday.